the market cap of gold, the market capitalization of gold has gone from 8 to 12 trillion. Well, I call it 12 to 15 trillion, depending on who you talk to 34 trillion. And so what's happening is it's not just the United States. Japan and France and the UK are on a reckless fiscal irresponsibility trend. The United States is running deficits of, say, close to 6% of GDP. The last 40 years, the average was around 3% of GDP. So you've got this recklessness in Washington, recklessness in Paris, France, and recklessness in Tokyo, recklessness in London, and investors in long duration bonds globally. No one's made any money since 2022. In other words, when interest rates go up, bond prices go down. This is what's driving capital into hard assets. We talked about this in our book, How to Listen to Markets Speak. It's a big thing. So it's there. People are putting their capital into hard assets, bonds of, say, around the world, not just the United States, but they're moving their money out of treasuries and into other bonds around the world. And so that's a trend, but it's not just a trend with treasuries. It's a trend with many irresponsible governments in the world. And once again, financial assets are just paper certificates, bonds, hard assets. There's a massive migration of capital, trillions of dollars as we speak are moving from financial assets to hard assets and core companies that control hard assets.
President Trump's very relaxed tone about the dollar sell-off is fueling speculation that the United States currency is at the very start of a longer-term decline. Do you feel that's where it's truly heading? Is this just the beginning?
We're probably in the third inning of this. One of the lines from our book is from Tocqueville and Tytler from the 1700s. This quote is, "A democracy can only last until the people, the citizens, discover that they can vote themselves largesse from the public treasury," right? And so what's happened is we've got the cycle of democracies. We're up to our 250th anniversary right now in the United States this summer, right? And there's going to be a lot of noise around that. But if you look at around the world, democracy lifespans are typically around 250 years. And the cycle that we talk about in the book, democracies typically start off near the bondage stage, where think of the United States after, say 1700. The United Kingdom had tremendous power over the United States. It was a bad situation in the United States. And then you move toward great courage, patriotism, entrepreneurship, and abundance, right? That's in the middle of the cycle. But then you move toward dependence, apathy, dependence, and then back to bondage, right? So this is a typical, just think of Argentina or think of Venezuela. Venezuela and Argentina used to be world powers on par with, potentially, not quite, but on par with relative to the US or France. And this cycle of going from bondage to spiritual faith, great courage, entrepreneurship, abundance, to apathy, dependence, and back to bondage. And so think about the United States. Where are we now? We clearly started off in the bondage, spiritual faith, great courage, entrepreneurship stage. That's long behind us. Mm-hmm. And now the new generations are becoming more and more and more disgustingly dependent on the government, right? And so when you have too many dependents and not enough contributors, that's what creates these fiscal imbalances, these deficits, and that's what causes further currency debasement, and that's what causes migration of capital out of financial and into hard assets.
Fascinating. And maybe the last question for today. This week we heard forecasts that the dollar is going to collapse and it is going to be replaced by gold. Now, I am very skeptical of that apocalyptic message because a sudden US dollar collapse would entail enormous economic turmoil in the United States and across the world. And gold, even though, of course, it is a safe haven asset, and as you mentioned, capital is flowing into hard assets. You can't really take gold to a store to buy whatever it is you need, to buy groceries, for example, just speaking very simply. And it doesn't generate income, so it preserves it, right? But what is your take on that? Are we going to see the dollar collapse, and is it truly going to be replaced by gold?
Oh, well, no, that's pretty silly. It's not going to be replaced by gold,
Yeah.
but the United States still has those 15, 16 aircraft carriers, right?
Mhm.
Um, the rest of the developed world, on average, has one or two, you know. So even China, I mean, so the United States is still, the dollar's backed by those 16 aircraft carriers. Never forget that. Um, so at the end of the day, the currency debasement, we've just had we've lost so many jobs in the United States. Washington wants a weaker dollar, but they're not going to let it get out of control. And there's a lot of things they can do to stabilize the dollar, right? And all they would have to do is if the Fed were to get hawkish again, right? In other words, well, one of the things we're not talking about in this discussion is that the perception of the Fed going to a Trump Fed, Rick Reeder, or Kevin Hassett. There's a new Fed governor coming in, and the perception is that Fed governor is going to be really dovish, and that means offering more accommodation, and that's another thing that's driving the dollar down. But if a Fed governor comes in and inflation resurges later in the year, which we think it will, if you just look at the Bloomberg Commodity Index to CPI, and whenever we've seen that the last 10, 20, 30 years, the Bloomberg Commodity Index, oil's up a lot today. Oil's up 20% off, almost, I think 14% off the lows, right? Natural gas is up maybe 80% recent weeks. So the Bloomberg Commodity Index is going like this, right? So we'll have a resurge in inflation. If the Fed comes back later in the year and tries to basically put another fight toward inflation by hiking rates, the dollar's going to strengthen dramatically. It's just all about expectations. It's about the fact that we've done a lot of things in Washington to kind of scare our trading partners away. We've done massive fiscal deficits. The Fed has been promising, they've been cutting rates, and the Fed balance sheet is actually expanding. So in other words, they're actually doing QE again. So all these things create a weak dollar, but it's very easy to reverse that. And I think there's a high probability that because of, think about this, right? Just think about this insane behavior that's happening in Washington. We're doing $1.8 trillion deficits, right? You're doing 1.5 trillion of data center spending coming from Silicon Valley. That's close to $3 trillion of stimulus, right? Right now, the Atlanta Fed GDP is up near 4 or 5%, and you're stimulating that much, right? So the probability that inflation bounces later in the year and the Fed has to hike rates again, that is very high, and that would stabilize the dollar.